Welcome back to The Wealth Expert, your go-to channel for all things financial. Today, we're diving into a topic that's on a lot of people's minds right now, especially with the current economic climate, avoiding capital gains tax. With many potential changes on the horizon, it's important more than ever to know how to protect your wealth. Let's explore some smart strategies just to do that. Minimizing your tax burden legally and effectively is one of the major ways to protect you from any future rises. Whether you're selling property, shares, or other investments, capital gains tax can take a big chunk out of your profits. But don't worry, I've got a few tips to help you. Keeping more of what you've earned in your pocket is the most critical thing as you look to build your wealth and or survive the current economic climate. What is capital gains tax and who needs to pay it? First, let's break down what capital gains tax is. Simply put, it's a tax on the profit you make when you sell or dispose of an asset that has increased in value. This can include property, shares, or even a business. But here's the catch. It's only the gain that you're taxed on, not the entire sale price. As you can see the list on this screen, which shows you the common assets that are subject to capital gains tax. So who needs to pay it? In the UK, capital gains tax applies to individuals, trustees, and personal representatives. However, not all assets are subject to this tax. Your main residence is typically exempt, but a second home, shares, and certain other assets are not. There are legal ways in which you can reduce capital gains tax. Now let's get into the good stuff. How to avoid or reduce your capital gains tax legally. Here's some of the most effective strategies that you can use. First of all, your annual exemption. Each individual has a tax-free allowance in the UK known as the annual exemption. For 2024, it's £6,000. Make sure you're utilising this allowance every year by timing your disposals to maximise your exemption. This is why it's so important to work with your professional advisors, whether it's accountants and tax or financial, to assist you with these things. Gifting assets. If you gift an asset to your spouse, civil partner, you can avoid capital gains tax as transfers between partners are generally exempt. This can be particularly useful if your partner hasn't used up their annual exemption. Another thing you can do is invest in ISAs. Any gains made within an individual savings account, ISA, are tax-free. So consider holding your investments in an ISA to shelter them from capital gains tax. Another strategy is to consider setting up a trust. Trusts can be used to pass on wealth without triggering an immediate capital gains tax liability, though it's important to get professional advice to set this up correctly. And also, with the imminent changes that are coming, plan ahead, get ahead, stay ahead would be my advice to you now. Capital gains tax on properties. One of the most common concerns is capital gains tax on property, especially if you're selling a second home or a rental property. Here are some ways to reduce that tax. Private residence relief. If your property was your main home at any point during ownership, you may qualify for relief on part of the gain. Letting relief. This used to be a significant relief for landlords, but it's now limited. However, if you meet the criteria, you can still reduce your taxable gain. Reinvesting in a new property in some cases can defer capital gains tax by reinvesting the proceeds into a new property through schemes like the Enterprise Investment Scheme, otherwise known as EIF. And as always, please make sure you seek professional advice from qualified individuals to cover the detail of these opportunities. Remember, planning is key. Before selling any property, consider the timing of the sale and explore all available tax reliefs to minimize your capital gains tax. How to avoid capital gains tax on investment. Capital gains tax doesn't just apply to property. It also applies to shares and other investments. Here's how to reduce that tax bill on these. Bed and ISA. What is that? This involves selling shares and immediately buying them back within an ISA, sheltering future gains from tax. Speak to a professional advisor when doing this and make sure it's still applicable and is available to you. offsetting losses. If you have investments that have lost value, you can use these losses to offset gains made on other investments. This will reduce your overall tax liability. Rebalancing your portfolio. By spreading out the sale of investments over several tax years, you can make the most of your annual exemption and reduce your taxable gains. It's also a good idea to use a capital gains tax calculator. Look out in the comments below for the link. This tax calculator will estimate your liability before you make any major decisions. This way, you can plan effectively and avoid any surprises. With the news, look out and be prepared for the upcoming changes, because they are coming. Potential changes to allowances and tax rates could impact your strategy, so make sure you're up to date on the latest developments. Keep an eye on key dates like the end of the tax year and be ready to act if new laws come into effect. The Wealth Expert will be here to keep you informed, so make sure to subscribe and hit that notification bell. Avoiding capital gains tax isn't about avoiding your responsibility. It's making informed decisions to protect your wealth for both you and your future family. By using these strategies, you can minimize your tax bill and keep more of your hard-earned money. If you found this video helpful, give it a thumbs up, share it with your friends, and don't forget to subscribe for more expert financial advice from my professional team and related financial partners. Thank you for watching, and we'll see you next time on The Wealth Expert.